Thanks for joining David, Kevin, and myself for the market update for the month of June. After a super May, June did not disappoint us. We had a fantastic June. The U.S. markets, as measured by the S&P 500 index, was positive by 5.02%. The Canadian markets, as measured by the S&P TSX, was up 2.61%. And global markets, as measured by the MSCI EFI, rose 2.09%. Kevin, what was happening in the month of June?
After months of tense trade discussions and exchanges, the United States and China finally came to a framework for a trade deal. Officials from both countries originally met in Switzerland in May, where they agreed to lower their tariffs while they continued to discuss trade and national security. Now, this framework for a trade deal, which was reached in mid-June, does remove higher tariffs, but it does keep about a 55% tariff on Chinese goods and a 10% tariff on US goods. The deal also makes it easier for the US to purchase rare earth minerals, which would be used in the manufacturing of electronic chips. Now, as of the end of June, the deal has not been fully approved by government leaders. However, approval of the deal does appear imminent. Harry, what was going on in Canada?
Canada, actually, June was fantastic, as I mentioned before. The market, on the good news, the market hit new record highs in June. But there's a lot of nervousness going on in the Canadian market, and that's to be understandable. The U.S. is our largest trade partner, and there's a lot of uncertainty, and we're getting some conflicting reports. A perfect example was the April sales report came out, and it showed a 0.3% increase in sales. But again, if we take a look at the tariffs and a lot of people rushing out to buy things before the tariffs, if we stripped away just the automobile and auto parts, that's 1.9% extra growth. We actually declined 0.3%. So again, there's a lot of nervousness waiting to see what comes out after July 21st. We're all keeping our fingers crossed. But again, that's the important date. If we see a lot of positive negotiations and a deal still not done, as typical, Trump will probably push that off. But if there's a little uncertainty and he feels that he needs to add a little incentive, we could see a little more rhetoric going out there. Kevin, what happened in the U.S.?
There's a lot of discussion around interest rates. At its June meeting, the U.S. Federal Reserve Board, also known as the Fed, held its federal funds rate steady at 4.25% to 4.5%. Now, this marks the fourth consecutive rate hold by the Fed as it continues to see solid economic growth, a stable labor market, and inflation above its 2% target. The Fed did note that it is continuing to monitor trade developments and how they will impact the U.S. economy. While higher reciprocal tariffs were paused and the U.S. is reaching some trade deals with different countries, tariffs still remain in place, and the U.S. Fed is concerned that these tariffs will eventually increase consumer prices and in turn cause inflation to tick up again. At the end of the day, investors still want to know, when do we think the U.S. will begin to lower its interest rates? Well, when asked, the U.S. Fed Chair Jerome Powell stated that the Fed can afford to remain patient. That if it does see inflation begin to tick down, it is willing to look and then lower interest rates accordingly. At the moment, the market is still anticipating that first rate cut will come this year.
Thanks, Kev. In conclusion, the money managers take into effect good and bad markets. So if you have questions, if you want to review your portfolio, if you want to know what the money managers are doing inside the portfolio to take advantage of some of this uncertainty, please don't hesitate to give David, Kevin, or myself a call. And as always, hope you guys are having a great summer and all the best to you and your family. Take care.